Okay, so we're trying something else out. I downloaded TradingView Desktop, so this is going to be new. But anyways, welcome back to the channel, guys. Yeah, we're going to just talk kind of about SPX, S&P, everything today. FOMC. FOMC is a nothing burger. I mean, we knew the Fed was going to hold rates. Didn't really say anything interesting. There's nothing really to say there. Only thing I'd say is we'll talk about yields and stuff in a minute. And we'll talk about VIX, whatnot, in a sec as well. But today's also big earnings, right? We had Microsoft and Meta report, as well as some crazy Carvana news. Let's actually start with that first. So, Carvana here, let's just take this to daily frame, did nearly, I mean, how much is that in a day? Like, what, 20%? Yeah, lower end of the move was 20%, close the day roughly 14%. So, if you guys didn't know, a research group called Gotham, they basically loaded a report exposing some of the fraud and you know, misfilings in some of Carvana's reports and whatnot and filings. And yeah, stock went down off that. And this has been a pretty well-known stock to be fraudulent. It's I mean, I don't know. To me, it's not really rare to see this. It's still got a long way to drop, but interesting to see that finally it kind of did some stuff. So yeah, I mean, this is kind of a cursed M pattern, anyways. I would call it. But we'll see how this plays out in due time. But what I really want to start off with is not just the indexes, but I want to just go down to some of the tech that reported earnings recently, which was Meta and Microsoft. So just looking at the extent hours, it was really down, and then Meta shot up, right? But the 736 level is interesting, because you have this big gap here that you technically need to fill, and it's doing that right now, right? Like, this was the previous earnings gap where it went down. The interesting thing about Meta is it did sort of beat, but the CapEx report for it basically shows that they're you know, spending a lot, right? So if I was to look at this, and I guess what we'll do is we'll throw on EMAs. Let's go EMA, right? So what I think is going to happen with this is it's just going to fill this gap here, this big gap, right? And then what it'll do is probably either scroll around a bit or just fill this and move down. Like, maybe it'll just bounce around in here for a bit. I don't see this doing some crazy, like, jump to like 800 or whatever. Like, some people probably are, but if I was to guess, it's going to hover in this area, fill this gap before making a new low, right? And I'll be honest, I'm surprised the market didn't shrug more at this, but then again, it's after hours trading. It's just algos going off, so it doesn't really mean anything. Like on earnings, when you get those crazy dips and crazy peaks, whatever, if the earnings and shit are good, I mean, the upside makes sense. But even if it's negative or a slight miss or neutral, whatever, like whatever's happening after hours doesn't mean anything, right? So I would say this: let this gap up and fuck around in here, and just do its thing. All right, like I don't really see anything crazy to do on Meta. I think this move was pretty expected, especially as well as there's a lot of flows where people are basically selling the put and then or selling like naked would it be naked puts or naked calls? I forget which one is the problem, but basically expecting price not to drop below a certain strike, which was the 550 strike. So they collect premiums while the stock stays above that 550 strike onto the upside. I just get confused because there's so many things like butterfly spreads, puts, calls, long put, short call, long call. Like, there's so many different names. So sometimes I have to go and just look at the options calculator and see which is which, just to give my brain a quick refresher. I mean, there's just so much to remember, right? Anyways, but I mean, this was kind of expected. I never play earnings. I'll be just full transparent. I didn't expect this move. I had no participation. I wasn't really caring for it, other than I was just kind of paying attention to the flow coming up to the earnings. So the move was going to be up, and that's just whatever. Don't really care. Just let it do its thing. But I think this gap, this huge gap here that's filling now, remember, we're gapping up, going to fill this gap. So it's probably going to come down at some point and fill the gap that it's doing up now to the downside, if that makes sense. And as well as there is a big one down here. Okay, so just be mindful of that. Microsoft, this one had kind of a worse reaction. The old guard, the tech here, this had me a bit concerned. Is this not? Oh, right. So this really fell hard, and I mean, rightfully so. I mean, like, I said this in a Twitter post yesterday, but you want these companies to really blow out expectations, And Microsoft just didn't really catch a bid. I mean, like, again, it kind of failed to reclaim like the 50, and now it's just selling off more. And it's got this big gap down here to fill from the tariffs as well, right? So I'm worried this kind of double top pattern here, like just thinking about it, like I'm worried that that's kind of playing out in the Nasdaq in a way, if that makes sense. Like I guess the Nasdaq is kind of up, but I'm worried you're gonna kind of get this false. I don't know how you draw this, like a false kind of breakout here, if that makes sense. I don't know how you would draw this essentially. Again, I'm not a pattern trader. I'll look at internal market metrics, the add tick, and then all the gamma and VIN and whatnot. But it's just weird. Does that make sense? Because everyone knows like the Nasdaq, is primarily just only made up of tech, right? Especially the Nasdaq 100 or the QQQ, right? I mean, if we want to like QQQ too, it's just, I mean, yeah, like it's just kind of sweeping this high. So until you get like a really meaningful breakout, I mean, I don't know. But even on like somewhat of the Tesla and Meta being up, whatnot, it's not doing anything. I guess the after hours changes, right? Or sorry, regular hours will change. But even just looking at our view apps from 2025, to now, I mean, we're pretty close to accepting back under this green VWAP if we get a rejection, right? And we all know this. The VWAP is from the tariff low. So this is our previous year value VWAP, the highest high from 2025, and it's getting compressive, right? So I really want to see the Nasdaq like go if it's gonna go, right? I don't want to see it just come up here and consolidate and get a bid down. And I'll be honest, guys, we're close. Like we are fucking close. We got a confirmation on the Nasdaq of CSEO sell warning, which is pretty important, especially if we go in time to like 2023 where these start going off. These are really down. These ones I would pay less attention to just because breadth was flashing as a buy, right? And this is also after a long consolidation that kind of means nothing. But anyways, when you get up to these crazy peaks and stuff after huge rallies, when you start getting these warning signs, it's not a good sign, right? And the fact we've got one now where we've started to falsely not be able to get above is kind of to me going, okay, right? Like maybe it's time soon that we're ready for close. I've been saying it's pretty close, right? I've been saying it's pretty close that we're near, especially when you look at something like, the SPX, where again we have one here. It hasn't fully gone off yet, but you can see it hit the upper end of the bound, and we've all known this. Like I've shown the option positioning a lot, but this whole 7,000 strike here, or box, whatever you want to call it, like we all know this is net dealer short. So if we go, let's just make a rectangle. Let's go 7,000, right, all the way up to like 7,300, for example. This is all net dealer short. So you have to basically eat through all of this and get the MM to buy that delta back to move up even higher past that. Does that make sense? But we've been stalled out here since October. So November, December, January. We could even argue, like, yeah, like it's just, I don't know what I'm trying to say, but it's just, you're getting into that zone of it's time to cool off, right? And again, like VIX is rising with the index again, and we're getting this weird resistance. Our VWAP again from the low is coming up pretty close to 6,900. Our previous year all-time high VWAP is getting in there. But what's interesting is it like today, for example, we opened at the high and instantly sold off all day, and then all day it just respected this VWAP pretty much the whole day. Right, we held under it, and then finally reclaimed it, but held under the middle line and actually closed below. And end of day got pretty volatile, to be honest. But FOMC day, it's common to have those weird swings, right? But what I'd want to see for like continued upside is again like to clear 7,000 as a strike, and then to get like a weekly and a monthly like higher time frame close over that to really show that bulls are stepping in to bid higher. But again, with a lot of these tech companies, like even Intel, no one's beating like amazingly. It's just like half-ass kind of like sort of just mediocre beats or misses, or forward-looking EPS or revenues looking down, or like capex expenses just being enhanced. Does that make sense? All the OpenAI news. OpenAI goes to some sort of trial versus Elon, I think April 27th, if I was reading. I'd kind of mark that day down in the charts just to see what happens. That'd be interesting. They're also looking to raise a lot more money. They're adding ads to OpenAI. Something's wrong there. Like, tech has been the laggard of the bunch for the last few months, and we've been saying that, right? But even coming into February here, I want to think of like core 1 month here, right? Like, I don't know. It's too low. Like, it's too low, right? And every time you get these crazy lows, that's usually when we're ready to capitulate. And it's weird that we've been starting to consolidate down here for a couple days, right? So, like, when it goes high, that's your buy. When it goes low, that's your, hey, watch out, market might be ready for a turn, right? And we are close. And even the VIX, like, if you just take a look at VIX one day, we're clearly holding the 15 level, no problem, as well as starting to really hold the 16 level. I've been saying for months, this is bullish VIX structure. When it starts to do these consolidation patterns, it usually goes for one dip before a crazy rip. Yeah, like even back here, you get these spikes, and then eventually just a big rocket, right? And we're close. And I've been saying I think it's going to be February or March. I'm pretty confident on February, but I know it's probably going to be Q1. So I don't know. SVIX had a sell signal as well come off, which was interesting. It kind of just filled this gap here, and that's slowly been shutting down. But I mean, what I'll do is I'll turn on the EMA again here just for SPX. But I mean, we're so close to like the 20-day and the 50-day coming up, like, or we can look at it from view app perspective, however you want to do it. EMA and view app follows pretty closely. But I mean, you're just close to accepting under key things, which is just like, it's not good, right? And I'll be honest, downside protection is so cheap. I firmly believe that market makers, big institutions are going to load up on these cheap puts or downside protection very soon, if not already building it and just letting everyone fight it out in the zone. Like, let the idiots battle it out in these volatile areas, right? So, I don't know. It's just weird. If tech keeps lagging or can't catch up, which I'll be honest, I think this was the week to do it. I mean, JP Morgan as well. Like okay, this one actually we should talk about. If tech's going to keep lagging and just not catch a bit, I mean, JP Morgan being under moving averages like this, what's the 200? What is it? Length 5? Like, JP Morgan near all-time highs and stuff, like, I can't recall a time where JP Morgan was trading below these moving averages near an all-time high, and the result came out well for anyone. You know what I mean? Like, that's not good. And it's not just JP Morgan, but like the XLF as a whole has started to lose the 20 and the 50-day. They're about to cross, and it's coming down to the 200-day. So you guys going to catch a bounce here on the XLF and push up, or keep going down, or what? But I will say this, financials, like, they might get hit soon with the weird credit card interest rate thing that came out, which was basically Trump wanted to cap credit card interest rates. They would lose a lot of revenue from low-end consumers who wouldn't be able to be eligible for credit cards, right? Because if you know how credit card interest rates and spending limits work and whatnot, like, you have to meet a certain criteria. And the low-end consumer right now in this economy is not going to meet it for half of like any of those criterias, right? And I mean, I don't know, like the dollar, the dollar did some weird stuff. We can talk about that too, but it's weird that metals are still ripping, dollar's super weak, the yen intervention that happened. There's weird stuff going on under the surface, and we're not seeing it in like bonds really. Like, the bonds are definitely elevated, and I mean, it's not even elevated. It's been range bound for like 2 years. They're definitely peaking up. Like, there's definitely been a bit of a trend upward since October, but it's like risk isn't being priced in the stuff you'd usually think it is, if that makes sense. And it's not even showing up in things like credit spreads. I mean, they're slightly uptick in the recent days, like a slight, but I mean, they're at the lows, right? But again, it's one of those things where they can't go much lower, right? The VIX can't go much lower. No one wants to be a large buyer at the highs. Metals are ripping, whatnot. There's just something weird going on. I don't quite know what it is, But it's like, if all these volatility metrics are starting to go off and nothing's pricing in risk, the only thing I can see is that's might get priced in is everyone that's too short in the VIX, like fund managers, whoever. IV being like in the weird spot that it's in, and the SPX still just having all these calls bleed out while being at resistance. Like, at some point there's gonna be a dramatic unwind, but again, like I've said this for a while, it's just a waiting game, right? Like eventually you want to see the market make a move, whether it's up, down, whatever. But it's just weird. Like, I'm not really sure where else to look to see risk pricing in other than our volatility metrics and just how cheap downside protection has gone, which basically, to me, like, I don't know. It's weird too, like if we think about something like Bitcoin, where it's just like, actually let's go talk about Bitcoin. Right? Like, we're still under the all-time high VWAP, we're still under the previous year VWAP. Like, this is weird, right? So we rejected pretty cleanly off that all-time high VWAP. And then previous year value, like, we're fighting to stay above it right now. Like, we're right on it. I know it's kind of hard to see, but we are right on the white here, a little above it right now. That white level's down about 87.5. And this lower VWAP here, coming up here, is getting damn close to covering up and dragging it down, right? And just something to note is that when this VWAP play usually happens, it's not good. So, like, let's see the low from last cycle, right? What happened, right? Basically, you came up and you start accepting under it. You checked in with the middle of it. Once you started holding under it, though, you see what I mean? Like once Bitcoin lost its trend and started accepting under the VWAP from the low, it was really bad, right? Like it started to move a lot lower. So what I'm worried about, I've been saying this for a while, is that if this starts to catch acceptance underneath this VWAP, right? Because that would be good, because that just means, buyers don't want to step up. They don't want to hold above previous year value. They don't want to push higher or holding under all-time high VWAP value. I mean, we know this from SMAs too, right? You had your death cross here with the 21 and the 52, and you're holding the 100 by a cunt hair, right? So, I mean, once you lose this 100, though, you're toast, right? Oh, God, there's a lot of fucking lines on the screen. But anyways, see what I mean is just, it's not bullish by any means. I mean, even just real quick, like Coinbase. Yeah, like let's go to the daily here. You can just see, like, every time this starts peaking, it's like everyone's selling off, right? God, I had another one here I could show you guys that's like pretty, yeah, like, I don't know, it works pretty well, right? Where it shows you where times are to sell off versus times where, to start buying. You can always flip colors on some of these things pretty well, but I don't know, from a TPO perspective, I don't know, there's nothing really to do here other than just trade the range, right? Like, here's your composite where you lose the point of control, you break down, build one out for a couple days, retest the lower, retest the point of control, and now we've shifted up a little bit. So we're trying to reclaim the 7-day VWAP and re-get above the 30, but the 90 and 30 are about to cross again, which is weird. It's close. Like, it's just close. Like, we wiped out all this gain up here and accepted back into the huge 8-week value, 8-week composite, and we even actually swept a low with the 8-week value area low, which is just terrible. Not good at all. Right? And just on a bigger scope here, that's where all the April value is as well. Right? So, yeah. It's just, I don't know. It's not great by any means. And just, like, looking even from a Bitfinex perspective, the TWAP is back on. I tweeted about this the other day, but what this means is that basically we're not ready to go up yet. Right? They're bidding on a pullback. Right? So we can see, like, this curve, and I pointed this out a few days ago, and I knew Bitcoin was going to nuke. Like, when I saw this start to round, I was like, okay, these guys are about to start longing again. So it's just not ready. And I was pretty firm that like we were close to the final move. Maybe that was the final move. Maybe there's one more pump into that 365-day or 200-day moving average, or view up, I guess. USDT dominance. And you can just see, like, you can just see it in the stablecoins. Like, people are retreating back into stables. It's trying to hold support. But I mean, it just doesn't look good, right? They're just retreating back into stables on any move you get. I don't know. I don't see any crazy move happening. I mean, Hype had a good move, but it also, like, it was the one laggard of the bunch that didn't really move much, like, on that whole BTC run-up. And plus the guy, the Tornado Cash seller, stopped selling. So, I mean, this is probably just mostly open interest. I don't know why anyone would be buying altcoins right now. So I'm not sure how much this pump lasts. I think it's a good squeeze. It's a good scalp long for sure. But, yeah, I mean, there's just not much to do in crypto right now. It's one of the more boring assets to look at and trade, honestly. So, I don't know. I think that's pretty much all I want to talk about. I mean, gold and silver is ripping. I'll say this: I don't think silver's done going till about 170 to 240. So it still has a lot of way to go. I don't know. Can I use an EMA for this? Yeah, like it's just above all of them, just ripping. Like there's not a short in there. You would never short any of this until you see it start to stall out, right? Like you don't stand in front of a moving train. Oil, actually, we'll talk about oil quick. If oil continues to break out like this, I would expect the longer end of the yields to keep pushing up. The only thing I'm concerned about right now in terms of yields is just this 2-year, is if this 2-year is going to break out. It might make the Fed have to raise rates or something. Yeah, like, I don't know, the Dow is definitely starting to get a little bit sideways for the most part. Like, just a couple weekly closes here where it's just up, down, and sideways. But I mean, Dow's down. I don't know. Like this is a good signal for sure of like how you know when markets are about to crash or get near it. The only thing I can see is that if God forbid we do somehow get a squeeze higher, I don't think you have much more upside to go. Like just looking at a huge 100-year channel, which has marked every single low and like most of the recent tops. You don't got much more to go, and we know this. Like we know this from options positioning, we know this from looking at the VIX positioning and whatnot. I just don't know, like the day we stop. Like I know it's close in terms of price and in terms of time, and I mean I've been right. Like we haven't really gone much higher. We've kind of just been like very up and down. Like it's just been super choppy, right? But again, the only thing I don't want to see for the bulls is a failed breakout attempt. But I also think, you know, like I don't think you have much more time left. I think when Nvidia reports, that'll really be the shifter. But I do think that Q1 correction's coming a lot sooner than majority of people are ready for. But kind of just gotta wait and see. HGX again, it pretty much has wiped out all those gains it had. It's trying to fill this gap back here. Again, very bad that this is diverging though, like especially with all the housing talk and whatnot. You know, midterms. It's just that's not good. And even in FOMC today, they said housing was struggling a bit. Yeah, healthcare insurance. I mean, that's a dead trade. Like, where was UNH? UNH had some. God, this chart just looks fucking terrible. It's just gap up, gap down. Look at this huge gap from 357 sub 200 or sub 300. Jesus Christ. Ah, I should have scalped that because I knew it was coming too. No, well, can't get them all. Yeah, CoreWeave, I don't know. Nvidia gave them $2 billion probably to help bail out some of their debt. They claimed it as an investment, which, I mean, come on, we all know it's not. Oh, credit default swaps on Oracle. I'll throw an image up on the screen. Those are rising even higher again. This thing is just doomed. It's literally any day now, like this year, maybe next year, that one of these AI stocks is going to go and it's going to cause tumbling of all of them, right? When do they report? They report March. That's a ways away. Video reports Wednesday, February 26th. Yeah, I'm surprised Nvidia isn't up more because, like, again, like the last few years that Nvidia's peaked to the top of this line, that was the market top or at least the correctional top. So it was close, like it was really close a while ago, and then it banged off. So I wonder if it's gonna get one more blast up. But I mean, you have to do it soon. That's a very high price range up there now, which I just don't think it's gonna reach. Just the bid hasn't been there. Get to 300. I mean, that's crazy. Even Nancy Pelosi sold most of her stock, or at least a good portion of it recently. Which I mean, that's our insider quant, right? I don't know. I just don't see. Yeah, I don't know. I just don't see much going on. Financials, just I don't know. Yep, not much to say. I don't know. Weak dollar though, not great. Not great, not great. But we'll see what happens for the rest of the week, going into next week as well. But for now, I think you just gotta let the idiots battle it out here. Yeah, the futures went really low and they reported bad. Now they're kind of up, but this means nothing. Like this can do whatever it wants. You gotta let everyone on market open and going into next week on a fresh week post some of these earnings to kind of figure out what the directioning is going to be. Anyways, that's my 2 cents. Love you. Bye.